Jerome Powell lets everybody's hope down as the Fed announces that it will have just one rate cut in 2024. And while you were scared, whales bought $1.3 billion worth of Bitcoin. And MicroStrategy proposes raising $500 million worth of debt to buy more Bitcoin. A U.S. representative is creating a proposal to end the Fed. Also, in an interview with Janet Yellen, she reaffirms what we already knew. Government debt is going up forever. And as a result, trust in the United States government and the U.S. dollar is declining globally. Welcome to Bitcoin Daily. This is Dante Cook, head of Swan Business. For the next 2 days, I'm recording from Chattanooga, Tennessee, as I'm coming down here to pick my son up from his uncle's basketball camp. So, here we are. Thank you for tuning along with us. Yesterday at 2 p.m., the markets were holding on for pins and needles as everyone awaited for Jerome Powell and the Fed to announce what they were doing for their next rate cuts. And the market reacted as if the Fed were going to cut rates. This coupled with a low CPI inflation print, which every number and every indicator in the CPI inflation print magically came back lower than expectations. This, along with a quote-unquote strong job market, gave people the impression that Jerome Powell might get up there and say, hey, we have enough data that we're going to cut rates in 2024 multiple times. This sent the S&P 500 over $5,400 to an all-time high in expectation of a rate cut. And Jerome Powell let everyone down in saying that they're only going to have one rate cut of 25 basis points in 2024, when the market was clearly expecting 2 rate cuts.
Inflation has eased substantially from a peak of 7% to 2.7%, but is still too high. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone.
Jerome Powell also said a couple of interesting things in his meeting that we already knew, that the jobs that came out, the non-farm payroll jobs, were probably a bit overinflated. Janet Yellen says that we're adding jobs at a rapid pace. Who else is adding jobs at a rapid pace? Unless you're an immigrant worker or you're a government employee. This looks like an NVIDIA or an Apple stock chart. No, this is the hiring spree that the government's been on in order to curry favor ahead of this upcoming election. All in all, the Fed reiterated a 2% inflation target, which we all know is probably not realistic anytime in the near future. So who cares what Uncle Rome or the Fed says about what their expectations are for interest rates in the economy moving forward? Nothing has changed, regardless of what they release in some dot plot. The long-term thesis and outlook for Bitcoin remains the same. When you have politicians like Representative Thomas Massie, who we've mentioned on the show before, talking about reading the Bitcoin standard and putting out a proposal to end the Fed, this is bullish for Bitcoin.
And I was actually listening to an audiobook by Saifedean Ammous called The Bitcoin Standard. And I'll warn anybody who wants to listen to that book, the first 80% of it is not about Bitcoin. It's about money and what is money, which I think is important to understanding Federal Reserve. And also, but he has to lay that down so he can explain what Bitcoin is, because you can't assume everybody knows what money was. And frankly, I learned some things or picked up some vocabulary that I didn't have about it there. And I was listening to that tape and I'm like, it is way past time to reintroduce a bill to end the Federal Reserve. And so I put it in the hopper and I thought, man, I may be the only one. Maybe I'll get 2 or 3 co-sponsors, but I don't care. This needs to be done. I got 24 co-sponsors. So the number of co-sponsors of the bill to end the Federal Reserve in 10 years has gone up 10x.
The government is still printing tons of money. And in an interview between Andrew Ross Sorkin and Janet Yellen, it confirmed everything that we already knew that was true about the government. The deficit will never go away. The debt is going up forever, Laura. And they're not going to cut their spending. They're just going to take more money from us via taxes.
When you were running the Fed, you talked about debt and deficits all the time, and you encouraged Congress to try to bring those things down.
Right.
We are now at a U.S. budget deficit has reached $1.2 trillion. It has not come down. It has actually only gone up. What are you doing?
Well, it has come down since the pandemic.
Since the pandemic, on a yes, but on a total number, we have a real challenge. Is there a plan to bring this number down materially? And I'm talking about the total debt load that you see the president pursuing.
Well, I think that if the debt is stabilized relative to the size of the economy, that we're in a reasonable place. The way I look at it is that we should be looking at the real interest cost of the debt. That's really
right.
what the burden is. And in the budget the president presented for this coming fiscal year, he proposes $3 trillion of deficit reduction over the next decade. And that's sufficient to basically keep the debt-to-income right. ratio stable. And this interest burden would be stabilized right. at
but how much of that is increasing taxes
level.
Versus actually cutting costs?
Well, it's difficult to cut costs. Discretionary spending, which is what's right. governed by appropriations, it has fallen relative to the size of GDP. And if once you involved in looking what's in there, more than half of it is defense. It's really not right. possible to get cuts there. And a growing source of expenditure is for retirement right. programs, Social Security, and Medicare. And, you know, I think it's right that especially the Job Cuts and Tax Act, right. Provisions of which will expire at the end of next year, really resulted in a substantial loss in revenue. And so undoing some of that and asking the wealthiest and highest income Americans to pay their fair share right. and, you know, raising corporate taxes somewhat, not right. back to previous levels, is part of what right. I think is a reasonable plan.
Every time the government prints money, they devalue the existing dollars. But that's okay, only if you have hard assets. And it appears as though the M2 liquidity charts are showing that money printing is back on globally. The long-term thesis about the US not being the world global reserve currency and all of the things that Bitcoiners have been talking about due to this excessive money printing are all coming true. This is very evident when you see countries like Russia announcing yesterday that they're stopping the use of the dollar and the euro on the Moscow exchange. And why would they trust European or US leaders when just today they're greenlighting a plan that would allow them to send $50 billion in aid to Ukraine using Russia's frozen assets? This is clearly undermining trust and faith in the United States for people that would want to buy our debt or our treasuries in other countries. People like Michael Saylor get the game, and that's why he makes comments like, "We'll be buying Bitcoin at the top forever, because Bitcoin is going up forever, Laura." MicroStrategy remains as bullish as ever. They're proposing a $500 million convertible note offering to raise more debt so that they can buy more Bitcoin. Other whales beyond Michael Saylor get the message too. As you see, the amount of Bitcoin being snatched up by whales in recent months has gone parabolic. If you look at these purple lines here on the bottom of this chart, you can see that whales have been accumulating in size. So honestly, it's irrelevant that Bitcoin is down over 2% on the day because the long-term thesis is still intact. So let me leave us with a few thoughts. Jerome Powell made a comment yesterday that was intriguing to me. He said, if you look back in 5 or 10 years, being able to spot the significance of a 25 basis point or 0.25% rate cut is going to be a really hard challenge because it's not that big of a deal in the grand scheme of things. One thing really caught my attention, that the markets are so thirsty and starved for the money printer to come back on, that the signal of the Fed cutting rates is actually more important than the Fed actually cutting rates. When you look at how Jerome Powell is thinking about the impacts of inflation and rate cutting on our economy, he's taking a long-term horizon and a longer-term perspective, which is what we should all do when we're thinking about our investments. And as you think about the landscape of what's going on geopolitically in the macroeconomy and this debt bubble that is looming over the US, but also countries globally, you realize that holding a digitally scarce hard asset like Bitcoin is the best long-term trade out there right now. So closing, I want us to zoom out and look at some data and some statistics to inform our investing behavior and habits. If you look at this chart between 1990 and 2019 of the S&P 500 returns, those that were fully invested returned 7.7%. If you missed the top one day of the S&P 500 returns, you had 3.8% returns. If you missed the two best days, you had a 0.8% return. If you missed the three best days, you had a negative 1.3% return. If you missed the top 5 days, you had a negative 6.3% return. And if you missed the top 20 days, you had a negative 27% return. So all of these sophisticated Buffett head value investors always talk about adages like this, that time in the market beats timing the market. But when they look at assets like Bitcoin, they just look at, oh, look at how far it's dropped in this one period of time, neglecting the long-term returns that have come from people who have just bought and held Bitcoin. The same principles apply for Bitcoin. If you miss the top 10 performing days in Bitcoin, most likely you go from having the best year that you can have in any asset class, as Bitcoin has been the best performing asset in the world 10 out of the last 13 years. But if you miss the top 10% of days, every other year or every few years, you're likely having some bad days. So here's some advice. Buy, put it in a cold storage, and forget about it. Wake up 10 years from now and thank yourself. All of the richest people that are on Fidelity or Vanguard or Schwab's platforms are all dead. Buy and hold and have generational wealth for future generations in your family. And with that, we're signing off for today. This is Dante Cook with Swan.com. Happy stacking.